Hey guys, welcome back. I hope you're having a really great weekend. So let's take a quick look at last week's price action before we head into tomorrow's trading ranges. So starting in SPY, we did open the week right here on Monday. And if we backtrack just a little bit, the week before that, we did open down and we bounced on the 30-minute 200 moving average twice. So Monday and Tuesday we bounced. We got back above the 35 EMA, and then we had a massive 4th of July rally. So we opened the week with that momentum and we gapped up, and from where we opened Monday to where we closed was completely flat. And last week we had a ton of economic data and we had Jerome Powell speaking twice. So we had Jerome Powell testifying part 1, Jerome Powell testifying part 2, then we had CPI and PPI. So Monday we actually didn't have anything at all. So after we gapped up, the only thing really to do was start consolidating towards the 35 EMA. Super flat day on Monday, and then that takes us to Tuesday where we gapped up, and Jerome Powell did speak starting on the second candle, and we did see another flat day. We did gap up. It was a green day, but if you were day trading it, it was very sideways. So we did a little more consolidation. 35 EMA started to catch up a little bit. And then day 2 of Powell's testimony, we opened with a gap up. Powell started speaking around here and we bounced right off that gap and had a nice big move up. Big day on Wednesday, and that took us to CPI on Thursday, and CPI did come in slightly dovish, and the first move was up and then we dropped. We did get back into this gap from right before Powell's second day, and once we filled that gap we did see a bounce, but that 35 EMA was there and we were not able to get above it on Thursday. But Friday we did have PPI and we gapped up. And actually, I'm going to do Friday on the 5-minute time frame, but just remember right here that the 35 EMA, we gapped over it, and I already put these little dotted lines here, so I'll show that in on the 5-minute time frame. So we gapped over the 35 EMA here, and then we closed at the 35 EMA here. So I'm going to switch over to the 5-minute time frame, and let's replay Friday, because I haven't done a replay in a while. So Friday, we did open after having PPI in pre-market, and it did come in hot. We did open with a gap up, and we gapped over the 5-minute 35 EMA and also that 35 EMA on the 30-minute time frame that I just pointed out. So we gapped over those levels, and from there we took off. We got to the top of the implied move right here, which was 560 within the first half hour. And then from there, we did come up a little bit. Keep an eye on this 35 EMA, because once we hit overbought, we do pull back to it and then bounce and take it even higher. We got outside of the trading range right here. And if you were selling bear call spreads at any of these strikes, you were probably a little bit nervous around here. But then towards the end of the day, we drop and we get right back into the implied move. And we actually close within the implied move. So the implied move was 560 and we closed at 559.99. So 1 penny within the implied move. So the reason I wanted you to see that this 35 EMA on the 30-minute time frame, and if you don't know this already, this is a pretty neat trick, but the 35 EMA on the 30-minute time frame is almost exactly the same level as the 5-minute 200 moving average. So you see the 5-minute 200 moving average right here, and this right here is the imported 35 EMA from the 30-minute time frame. So both of those levels were right here. And when we dropped there, you can see the wicks underneath. There was buying at that level, but we did end up closing within the implied move quite impressively. So that was SPY, and SPY did close up 0.63%. VIX came down 3.56%, and we did close within the implied move. And then switching over to QQQ, we did, let me take this back to the 30-minute time frame. What time frame do I want to do this on? So here on the 30-minute time frame, you could see quite similarly right here we bounced off the 30-minute 200 moving average. This was the week before last, and this was the 4th of July rally. So we did open Monday flat, and we did open pretty overbought, and we did consolidate on Monday. We did close higher. It was a green day, but it was a low volume sideways day. Then we gapped up on Tuesday. Tuesday was the day where Powell had the first day testimony to the House, and we opened with a gap up. We came down and filled that gap. You could see that 35 EMA right here. We did see a little bounce there. Heading into the second day, where we gapped up and filled about half of that gap and then pushed and made new all-time highs. Then Thursday, we had CPI, and we pushed up to start, made new all-time highs, and then we dropped. Big down day. If you remember Thursday, basically all tech was selling off. We did drop it all the way down to the 4th of July gap. And once we filled that 4th of July gap right here, we did see a bounce, and we closed just a little bit above that. And then on Friday, I almost want to take this back to the 5-minute time frame. So Friday, we did open up, and we also had that very big move that we saw in SPY to the top of the implied move, which was 497. And then from there, we took it to the 5-minute 200 moving average, dropped it back down to the 35 EMA, and then we pushed up almost to the top of the trading range, and then we had that same drop at close, and we also here closed within the implied move. So if you sold any one of these strikes on that move up, that would have been a 100% win at close. QQQ did close up 0.59%, VXN closed down 3.68%, and we did close within the implied move. We didn't completely trade within the implied move, but we did close within it. And then switching over to SPX, I'm not going to go over the week before because we already looked at that in SPY, but we did open here with that gap up right here, and we pushed up to the top of the implied move, and top of the implied move was 56.15, and we got there and pushed even higher. We dropped back down to the 35 EMA, and then pushed up even higher, completely outside of the trading range. And then from there, things got pretty shaky, and we got pulled back in to close just outside of the implied move. So in SPX, the top of the implied move I had at 56.15. We closed just a little bit above that, 56.15.34, and I actually took 56.30, 56.40 bear call spreads here. And not gonna lie, I was pretty nervous when we got up here, but at the very end of the day, it did close underneath my spreads. So we brought it back down to the 5-minute 200 moving average. And if we switch that back over to the 30-minute time frame, that also translates into closing right at the 35 EMA. So that was SPX. SPX closed up 0.55%, VIX closed down 3.56%, and we closed just outside of the implied move by 34 cents in SPX. And IWM started the week right here with a gap up, and if we look back at the previous week, you could see that we did have a bullish breakup right here, and then the entire week before we started last week was a fight to hold these levels. And so Monday we opened with a gap up, we dropped back down to the 30-minute 200 moving average right here, and then on Wednesday we did get above the 35 EMA, and then that brought us to Thursday. After CPI, we did open with a gap up and saw that really massive move in IWM. And we had that really strong bullish momentum where you see the 35 EMA trading above the 30-minute 200 moving average, and then green over green, we did break above a very critical resistance level. I'm going to zoom out a little bit to the 1-year time frame here, and you could see that that level that we gapped over on Friday was the same resistance we saw back in March. So that's a big move. And then if we zoom out even further, we could see that that same resistance level that we saw in March was a resistance level back in April of 22. And before that, it was support. So that 211, right around 211 level is where we gapped up. And it'll be interesting to see if we can hold that. And after we gapped up on Friday, we did push up and make new highs, not new all-time highs, but then we pulled back and we did end up closing within the implied move. I did have the top of the implied move at 214 and we closed at 213.14. So in IWM, if you did sell 214, 215 call spreads when we got up here, then those would have closed 100%. IWM did close up 1.17%. RVX closed down 0.81%, and we did close within the implied move on Friday. All right, so that was a recap of last week. Tomorrow, Monday, July 15th, we do have Jerome Powell speaking again at noon. I have no idea what he's going to be talking about, but he is speaking at noon, so just be aware of that. And let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Leave me a comment today. I love hearing from you guys, and also don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Alright, so this week we do have a bunch of Fed speakers. And we also have BlackRock reporting earnings on Monday and Netflix on Thursday. Those are the two big ones that stood out at me. And we also have this Trump assassination attempt to deal with. How is that going to affect the market? Most likely the market's going to brush it off, just like it brushed off the conflict in the Middle East. And if it doesn't brush it off, then we're going to be watching VIX for the trading range expansion. But until then, these are the ranges that we have to work with. So starting in SPY, tomorrow's implied move is between 556 and 563, and that is from options. And the 30-day average volatility takes that a little bit wider, 554 to 565, and that is for Monday's contract. And then on Tuesday's contract, the implied move is between 555 and 564. And you might see this little line right here, the little dotted green line. I am starting to put in from the previous day's ranges that second day where the implied move landed. It's not necessarily a level, it's just for my own reference, but that's what that is, and maybe I'll stop putting that in there, but for now I am tracking that. So to the upside, the very first level to look for is going to be that top of the implied move at 563. Just outside of that, we do have the all-time highs that we did make last Friday after PPI, and above that, the implied move on Tuesday's contract is 564. And then to the downside, we do have this 35 EMA level. 35 EMA, let me just fix the style here. 35 EMA did catch us when we dropped at the end of the day. And it is a very critical level. We do see it all the time. Right here, we dropped below it and we did get pulled back up. So right here, when we dropped on Friday, we did get pulled back up to close above that level. So 35 EMA, I always say, always know where your 35 EMA is, because it does tend to act like a magnet. We don't stay away from it for too long. And because we did close at that level, if we do start getting momentum in either direction, then look for where it is. But we did close pretty much at the 35 EMA. So do we bounce at this level or do we drop? If we do lose this level, then we do have this up gap from PPI. We did fill the, what gap was this? This was right before Powell spoke the second day, and we filled that with CPI, but then with PPI we gapped up. So the bottom of that gap is at 556. I also have the bottom of the implied move at 556. So that could be a key level to look for. And then 555 is the bottom of the implied move on Tuesday's contract. And then 555 also right here. This is where we bounced on Thursday. And then underneath all of it, we do have the 30-minute 200 moving average. That momentum is still going up. We are still very bullish. And until the moving averages say otherwise, we are bullish. So that is SPY. And switching over to QQQ, the implied move over here is between 490 and 499, and that is from options. The 30-day average volatility takes it a little bit wider, 488 to 501, and that is for Monday's contract. Tuesday's implied move is between 489 to 500, and to the upside, the first level to look for is going to be 499, and that is the top of the implied move. And you could see that is also where we saw resistance on Friday. So Friday's resistance, top of the implied move, 499. And then above that, Tuesday's contract's implied move is 500. And then if we do get above that, then we have just outside of tomorrow's trading range, we have all-time highs. We are right now just a little more than 1.5% away from all-time highs. And last week, QQQ did sell off pretty hard. So we did see a V on Friday, but we didn't quite swing up high enough to get back to all-time highs. So that is the upside. To the downside, oh wait, let me backtrack just a little bit. I missed the 35 EMA. It's right here. All right, that is a big deal. So if we do pop up at open, the first level to look for is the 35 EMA. So I take all of that back. If we get above the 35 EMA, then we're looking at 499, which was Friday's resistance. This little green line, that was the top of the implied move from the previous video. Again, not sure how long I'll be tracking that, but it could come in useful. And then 500 on Tuesday's contract. So just a little bit different. And then to the downside, we have 490, and that also lines right up with where we saw support on Thursday. After that big tech sell-off, we bounced right around 490. That was also the independence gap right here, 4th of July. So 490, key level to look for. 489 is the bottom of the implied move on Tuesday's contract. And then we do have the 30-minute 200 moving average just underneath tomorrow's trading range and in Tuesday's trading range. And with that big tech sell-off, we did have some pretty strong momentum. And just in that one day, it gave it a little tilt. It's still bullish, but it's a little bit more sideways after that sell-off. So momentum could be slowing down in tech. We haven't gotten there yet, but we did see that rotation into small caps with IWM, and it is possible that we do see a little bit further of a sell-off. But right now we are still bullish. We're actually neutral because we did close underneath this 35 EMA. So between the 35 EMA and the 30-minute 200 moving average, that is neutral territory. So to be bullish again, we need to get back above this 35 EMA. That is the fully bullish moving average pattern on the 30-minute time frame. And if we do that, then go long. But if you see this as resistance, then look down for opportunities. So that is QQQ. SPX, the implied move right here is between 55.85 and 46.45. Okay, that's a mistake. That is 56.45. Whoopsies. 56.45 is the top of the implied move. And then the 30-day average volatility is a little bit wider, 55.60 to 56.70. And that is Monday's contract. And then on Tuesday's contract, the implied move is between 55.78 and 56.55. And let me get this arrow in here because I missed it. And to the upside, the very first level to look for is, I'm not going to say this is to the upside because we closed right at it. It's the 35 EMA. So 35 EMA is right in the middle of the trading range. So basically at break even. Above that, the top of the implied move is at 56.45, and then the top of the implied move on Tuesday's contract is 56.55. And then just above that, we do have the all-time highs that we made on Friday. And let me make sure that value is right. 56.55, 56. Yep, all-time highs right here, just outside of the implied moves for the next 2 days. And then to the downside, the bottom of the implied move is at 55.85. That is right here. The bottom of the implied move on Tuesday's contract, 55.78. And we do have this gap right here. This is from right before Powell spoke the first time last week. So we had a little gap up and then we traded sideways, but we left this gap open. So this is a possible level of support, 55.72. So I'm going to call that 55.70. And then underneath all of that, we still have this 30-minute 200 moving average, and it is pointing up. Momentum is still bullish. We did close right at the 35 EMA, so the full bullish configuration of the moving averages is to have price trading above the 35 EMA, and we closed right at that level. So really watching closely what happens around this 35 EMA. Do we get rejected down, or do we find support and stay bullish? So that is SPX and IWM. The implied move over here, we did have two pretty big days last week, so we do have an expanded range compared to what we have been seeing down here. The implied move over here is between 210 and 216, and that is from options. And the 30-day average volatility is wider than options this time. So this is the first time since I started covering IWM that the 30-day average volatility is wider, and that is 209 to 217, and that is actually exactly the same range as Tuesday's implied move, so 209 to 217. And to the upside, the first level to look for is going to be right here. This is where we got pushed back down on Friday. That is right at let's call it 215, just under 215. And then that is also where the top of the implied move was for Monday's contract from the last video. And then above that, top of the implied move at 216. Top of the implied move on Tuesday's contract is 217. And then to the downside, we do have this big up gap that we saw on Friday. Both Thursday and Friday we gapped up, and the bottom of this up gap is a long-term support and resistance. I'm going to zoom out, and so that red line is where I just pointed out, and that was resistance back here. That was in March, first week of April, and then prior to that, that was resistance back in 2020 in March. Sorry, I take that back, in 2022, and then before that in 2021, and then that was a support level that did hold us up. After that level did hold us up for a few months, almost a whole year. Let me measure that out real fast. So that was support in 2021 for 328 days, so almost a whole year. And then we did break underneath it, and resistance here and resistance here, and we are right at that level. So extremely critical level, that's around 211, and then that is to the downside. So 211 is that red line right here. Just underneath that, the bottom of the implied move is at 210, and the bottom of the implied move on Tuesday's contract is 209. We are trading pretty far away from this 30-minute 200 moving average, and you can see we do have this up gap above that. I wouldn't be surprised if we do test that level. We don't have to, but it is possible, maybe even likely, that we do pull back and test that to see if we can move higher, if that is supported. So, but that is outside of tomorrow's and Tuesday's trading range. So there you have it, guys, all 4 trading ranges. Let me know in the comments how you plan on trading this. Let me know in the comments what you guys think about this weekend's events and how you think they might affect the market. I'm always interested in hearing other opinions. And don't forget to have fun, trade safe, make sure you take profits when you're out. I'll see you guys tomorrow night.